Welcome everybody to Wall Street Reporter's inaugural Baby Unicorn Stocks. It's an exciting event. We're going to bring you 3 companies, ground floor opportunities, maybe even pre-ground floor. These are sort of everybody knows what a unicorn is, right? A unicorn is it's a company that goes to $1 billion valuation in the venture capital world. I think in the microcap world, we could define a unicorn as something that goes to really a $500 million valuation or even $1 billion. But a lot of the companies you're going to be meeting today are all under 50 million valuation. So it's really a 10x from here if they become a unicorn. And again, we've brought you so far in the last 12 months, 8 stocks that are up already 10x, between 10x and 50x. And today we're going to get some really early ground floor opportunities to see if these could be potentially our next, our next super stocks or what have you. The main part of this event is watch the presentations, ask your questions, ask the CEOs your questions, and let us know. There's going to be a poll, there's going to be a survey afterwards. Give us your opinion, let us know. It's confidential. Let us know what you think. Are these potential unicorns or are these dogs? Confidential, so you tell us, and we'll share the results later. So with that said, let's meet our next exciting presenter, the next potential baby unicorn, which is Organic Garage. The stock symbol is OG in the TSX Venture, OGGFF in the US. So very exciting company. This looks like a baby Whole Foods. We got baby unicorns, baby Whole Foods. Let's find out. So again, for anybody that's watching right now, make sure to again ask your questions, and then we're going to have the poll where you're going to vote. Is this a baby unicorn or is it a dog? So one of the two, right? It's so Matt, let's get the slides up on the screen, and I'm going to disappear.
Yeah, that's great. Thanks, Jack. And I just want to thank everybody for attending today to learn about my great company, Organic Garage. I'm going to walk through our presentation to show you who we are, what we're up to, what we've accomplished, and where we're headed. So it's very exciting. So to start off, like I mentioned, here's a brief table of contents, and we'll be walking through it today. So who are we? For those of you that don't know, Organic Garage is an organic and all-natural grocery chain located in Ontario, Canada. Myself, I'm a 4th-generation grocer, so I always like to say that retail is in the blood. And I think it's always important that people know that, because it's nice for people to know that there is a face and a name and a history behind a business. We started, about 15 years ago, so we have a long history in the retail business. And prior to that, like I said, I'm a 4th-generation grocer. So it's a great story that we find our customers really gravitate towards, when they're choosing us over our competitors. This picture I always like to show is of my grandfather and his 2 brothers. This is taken in the late 40s, early 50s in Toronto, Ontario, Canada. And we put this up in our stores so that people do know that there is a history behind a business. And we're finding that, customers really want to understand who are behind businesses. How do they attach themselves? How do we engender loyalty? And I think that comes from the story of the business. And I think there's nothing better than showing this photo as customers enter into our store to show that there is a history, there is a lineage, and there is a background in the retail business, in the grocery sector. So what makes this different? And I always like to kind of go back to Warren Buffett's, economic moat theory. How do you insulate yourselves from competition? And so the grocery space is competitive. So these are ways that we differentiate ourselves and insulate ourselves from potential new entrants, or how we compete against, larger companies. And there are 4 main principles. First off, our brand, how we communicate, how we differentiate ourselves, and in terms of how we, the way our company is branded and the feeling that we give customers is something that we feel is very different from our competition. And I'll show you some examples of that and some photos in the next slide. But the second main point is our environment. So how do we encapsulate, who we are, what we're all about when customers enter our stores? And our environments are very market driven. They're very intimate shopping experiences. It's an industrial chic vibe, concrete floors, exposed ceiling. And it's a much different feeling than what you'll get from, competitors in the market, where traditionally organics and all natural, it's very greeny and kind of tree hugger-ish. We like to have a very, millennial hip vibe when you're entering our stores. The next main differentiation is our product mix. So we're an A to Z shop. So we cover every major category. We're 8 to 10,000 SKUs in our store. You can come in and do a full grocery shop in every category, which is much different than most traditional, I call them health food stores. We like to say that we're a grocery store. We're not a pill shop that happens to sell groceries. And the last main point, and the most important, is our value proposition. So everybody knows the whole paycheck benchmark when it comes to organics. And what we've tried to do is break that benchmark by applying the sort of discount principles that the large major grocery chains have applied to the grocery industry in their discount banners. And that is smaller store footprints, highly rationalized SKU base, simplified labor model, and pass those savings into price that allows us to be 18 to 24% cheaper than a Whole Foods, 15 to 18% cheaper than a natural grocery chain, and 8 to 12% cheaper than any major national chain. And so that is a key differentiator for us in how we position ourselves in the market and how we compete. And so to give you some examples for those of you that haven't been to our stores, you get to see visually kind of the way our stores execute. And for those of you that are US based, I like to say that, if you shopped in a Whole Foods, it's kind of the efficacy and kind of intimacy of a Whole Foods with the fun, irreverent bluntness of like a Trader Joe's. And so you get to see that in some of our signage. We only sell the good, stuff here in that slide to the left, and you get to see kind of the faux brick and the industrial vibe that we get with chain link and things in our stores. Here's another great example of our brand and our unique environment with our, self-serve stations. You get to see the way our signage and how we communicate with our customers in our store, because we don't hire specialists and things on our staff. Our staff are focused strictly on filling, cleanliness and providing polite and friendly customer service, but not passing along knowledge. They're focused on those key drivers. And you get to see the environment and kind of how we brand our stores. Another great way, these are some of the signage we have in our stores, the way we print fun things like hopscotches and stuff on the floor, just to create that sort of unique environment that people are not used to seeing when they enter a traditional grocery store. And it really wows them into a place where they want to come back and experience. And it's an experiential moment when they're in the stores. And so, we deliver value in numerous ways. We have a flyer that we deliver to customers via email every 15 days. We're always focused on providing value every day and breaking that mantra of the whole paycheck that came, with, like a Whole Foods and the way they promoted organics. We want to focus on value, delivering value every day through everyday affordable pricing and infilling with our flyer pricing, in-store specials, manufacturers clearance. Any way we can provide value is something that we're very driven by. And so what have we accomplished to date? And so we're a $30+ million a year company. I always like to say we are not a startup. We are well established. We are great cash flow. We have 4 successful locations in the Toronto, Ontario market. We have built a very loyal following on social media. If you follow us on Instagram and Facebook, we have thousands of followers. So we have a very unique and loyal following. And most recently, and I'll touch on that in a second, is we've recently acquired a plant-based food company to help deliver additional shareholder value, which should be very exciting for new investors on this presentation. And if you're an existing investor, that this sort of acquisition that we made to tap into the highly excitable plant-based food space. So where are we now? And so this is a great slide and tells you just briefly how we've grown our revenues over the last 4 years. Our share price, where we are with market cap. We're a very tightly held company, with a little over 50 million shares outstanding. We have a very strong cash position. We have the strongest cash position that we've ever held in the history of our company. So if you're a potential investor, you should be very excited about the position we're in to capitalize on the growth, which I'll touch on in the next few slides. So where are we going? And this is the main question. And this is something I know a lot of you are going to want to know as potential investors in Organic Garage. So first off, for our bricks and mortar side, there is a ton of potential. We've outlined 3 on the far right here, 3 growth potentials. One is our local market. So our local market here in Ontario could easily support 20 to 30 Organic Garages very easily. We've mapped out the market and we're very excited about the potential in our local market. When we talk about national across Canada, there's certain provinces in Canada that we feel that are ripe for expansion, and we feel that you know, there's potential for us to become a national player, whether we partnered with a company, whether we were potentially acquired to help grow out nationally. There's tons of opportunity here in Canada to be the leading organic and all-natural grocery chain. And then obviously internationally, which is really exciting for US-based investors, or we have a large following in Europe, is the potential to license and grow the brand internationally. And the beauty about Organic Garage and kind of the way we've established the company is it's easily to license the concept and grow it, given the concept and how tight it is and how we brand it, how we've merchandised, and the size square footage that we're looking for. So to find a local partner in an international market who knows the market and where we could license our, you know, our branding and our expertise and how we convey ourselves to our customer and our pricing model gives the brand a ton of potential, whether it be locally, nationally, or internationally. In terms of just partnership with, you know, online, I know a lot of you might be wondering, you know, how do we satisfy the online component? So we recently signed a partnership with Instacart, and this is a great example where, you know, on the picture to the left and the map shows kind of our coverage in our local market with our previous provider, and with our recent signing of Instacart in terms of our partnership with them, it opened up 7 to 10 times as many households in our local market to deliver to as we continue to grow out our bricks and mortar expansion. And so one thing that I want to touch on that's super exciting for those of you that are following the plant-based food space and how hot it is we saw a unique opportunity in the market to acquire a company that had an excellent management team, and to tap into all the excitement that was going on in plant-based in terms of the capital inflows and the attention on this space, to garner greater attention for Organic Garage and what our mission is, but also for, you know, this great company that's founded and co-founded by two partners that are just, you couldn't ask for better co-founders in a business. And so why we access this space is, and you know, for a potential investor, you should be super excited that we look out for these opportunities. One, we're always driven to provide additional shareholder value, and tapping into a space like the plant-based food space is not foreign to us. Most plant-based companies start in companies like Organic Garage, so we're on the ground floor seeing exactly what's going on in the plant-based food space, and can lend our expertise in retail with our connections in the distribution and manufacturing community to help scale these companies and deliver additional shareholder value to, you know, our existing shareholders. And so the company was founded by Afram Pristine and Craig Harding. Both are you know, definitely renowned here in Canada and North America. Afram just launched a TV show on the Food Network that was aired in North America. And Craig Harding is also partnered with the Food Network as a restaurateur, and really drives the culinary team of developing the physical products and making sure that they execute for a customer, you know, when they're at home, and making sure that these plant-based products can execute like their dairy equivalents. So in terms of a management team, you couldn't ask for a better management team. Afram Pristine is the go-to for cheese in Canada, definitely, if not North America. And Craig Harding, with his culinary expertise and being, you know, a celebrity chef, and cultivating kind of the products and the taste profile, like I said, you couldn't ask for a better team. And so the potential for, you know, this company as we continue to scale it, and what, you know, potential investors on this call should be super excited about, is we're basically on the ground floor. These products are going to be coming to market in the next, you know, 60 to 90 days. And so the future is only bright in terms of where we're headed from here. And so you see kind of the milestones that are coming up, from a domestic launch here in our local market, to a national launch, and then an international launch where we're going to be looking at the US markets and the European markets. And the beauty of the plant-based products and plant-based foods is how well they transport. So we can manufacture them domestically and export them, you know, into international markets, making it very affordable to scale the company. And for those of you that follow the plant-based food space, you know the attention that was given to companies like Beyond Meats, you know, in the US market. And here we have a company called Very that launched recently that garnered a lot of attention in the plant-based meat space. But plant-based cheese and plant-based dairy has been very hot lately, with a lot of recent acquisitions from large multinational players like Danone and Saputo, who have acquired companies in the plant-based dairy space. So there's a ton of potential as we continue to scale this company and deliver additional shareholder value. whether we continue to grow the company, we can spin out the company, or we can potentially sell the company in the future. So there's lots of ways that we can deliver additional shareholder value over and above Organic Garage being an organic and all natural grocery chain, to looking for opportunities like this that we know, because we're foodies, in terms of helping scale and grow a company. So yeah, so that's the presentation, and I look forward to speaking to any of you that have additional questions. I know I want to leave some time for Q&A. I know there's going to be lots of questions and things that people are going to want to know about Organic Garage, and so I'll turn it over to Jack to open it up to a Q&A in terms of some of the questions that he has. So Jack, I will turn it over to yourself.
Okay, Matt, hang on a second. I'm going to get, we have the poll. Is this a potential unicorn stock poll launching? I need to get this off the screen now. I may have to, how do I get this off the screen? I may have to close it out early. Okay, so yeah, this thing is a little bit buggy here. Okay, so all right, I'm going to close it out. It's not working as we can't have two things. This is, I guess, it's an old technology what we have here. Okay,
yeah,
Matt,
no
so
problem.
great presentation. I love the name, the Organic Garage. I think it's, we talked about this before. I think it's just like a phenomenal brand for what you're doing. It's like, again, it's it's sort of like again, like you call it a hipper Whole Foods. I think there's also more than a Trader Joe's. Also, Trader Joe's, I think, is a little bit corporate. It's become a little more. It's a little dull. I think it's a little bit. I mean, the store experience. It's that experiential vibe. We spoke about that the other day. It's sort of like what's the famous grocery guy in what is in Connecticut? What's his name?
Stu Leonard.
Yeah, sort of like that, but more youthful. Matt, I want to ask you, the main question is, okay, so what's the path? What's your path for making Organic Garage, a unicorn, to getting to that $500 million to $1 billion market cap? What is the path to get there? Can you get there, and how long would it take to get there?
Yeah, the beauty is there's a ton of runway for growth. So I know, Jack, you and I spoke about this, but our initial goal is to get to that 100 million a year in sales. And for those who are potential investors, like I said, we're not a startup, so we're well established. We're well on our way to doing that. And here in the local market, and I think across North America, I'll even say in general, what COVID has taught us is that grocers are essential services. And so, unfortunately, for some retail businesses that have closed down, it's been fortunate for us in opening up a ton of real estate potential. So our real sweet spot is in that 10 to 11,000 square foot range. So for whether it be a clothing store that shut down, a Bed Bath & Beyond, a Pier 1, something like that, we can take those spots. And so for a growth trajectory, there is a ton of potential to easily get to our initial goal of 100 million in sales. And when you look at multiples in the space, whether it be as a hip grocer that could be a potential acquisition target, or with the additional benefit of our plant-based food company, the multiples are there, the excitement is there in the space, the renewed attention in grocery as an essential service. You look at potential acquisitions going on in UK, with some private equity firms that are looking to buy a large grocery chain there. There is a renewed interest in grocery and as an essential service that served the public during a very trying time. So I think there is a ton of potential, absolutely.
Okay, no, so it's kind of it's an interesting model in terms of value. So basically, the space you're looking at is about 10,000 square feet. Those are the types of spaces you're going after. I mean, there is a ton of them. I know, like in New York City, this is like massive vacancy, and I think there's definitely in that market there's definitely a niche for a value price, good organic food groceries, which is like an alternative to Whole Foods or Trader Joe's.
Yeah, I mean, you have restaurants that have unfortunately closed down that are in that 10 to 11,000 square foot range. So that's the real sweet spot. I always tell people we take the spaces that are too big for the small guys and too small for the big guys. So it is a real sweet spot where we're not, going head to head trying to grab real estate away from potential companies that are much larger than us, and we're in a potential to grab space from retailers that are much smaller than us. So it's a real sweet spot that we've hit in terms of what our model is in the space that we occupy.
What do you think in terms of the valuations, in terms of multiples? typically like the traditional grocery chains, I don't know, like, you know, what are they, what kind of multiples do they trade at? What kind of valuations?
Well, it depends. I mean, here in Canada, it's tough to equate exactly because you're talking about companies that have been around for a long time, and they're not really growth stories anymore. And part of what drives
It's like
value is,
almost a utility.
yeah, it's a growth story. And so what's interesting is for our traditional large grocery chains here is they've stagnated. And so one of the ways that they're continuing to drive growth is through acquisition and buying companies like us. So that's why it's exciting as a potential in the future, whether we're going to be an acquisition target. But for us, because we're such a high growth story and because there's so much potential in the organic food space, it's hard to compare against a traditional long-standing incumbent that's kind of stagnated with their growth. So I think for us, where we're at as a company, it's only up from here. I mean, we are only going to continue to grow and continue to, multiply out as we continue to fill the gap in the market. So it's a real high growth story. And, what that is something that we're really focused on coming out of COVID is the opportunity that exists in the market and really going out and grabbing these retail spots.
Okay, so I think what's impressive is there's two things that, from an investor standpoint, you have these very high margins, which is unusual in the grocery business, and again, you have the branding is really incredible. It's totally different than anything else out there in the grocery world, and whether you're talking about traditional or you're talking about Whole Foods or any of that stuff, completely different. The merchandising, the whole, it's really it's an experiential
Yeah.
thing. You're selling an experiential value. So I think this store is the type of store where I think people will want to go to that store. I mean, they actually will want to go there for that experience. It's like, I mean,
Yeah, no,
your
absolutely.
demographic, I think, is mostly, I mean, listen, everybody eats food, but I think the store really appeals to like millennials, people in the 20s, 30s, whatever. I mean, nothing prevents a 70-year-old from going there,
Yeah.
but it has that vibe where, you're going to have people just going to want to go there, hang out,
The beauty with the value proposition
Good.
is we cater to everybody. It's like we say, we're a store for everyone, and we'll fit any budget. We're here to make sure that people can eat healthy every day for less, and that's a key thing. And what we always say in terms of a demographic, whether it's a young family who just had kids who are really concerned about what the kid is eating and focused on their longevity in life now that they're new parents, or whether you're 50, 55 plus, and especially coming out of COVID, nobody wants to get sick. And so how do you prevent getting sick is you focus on health, and that is eating well and treating your body well. And so that's why, whether you're 18 or 78 and 80, it doesn't matter. You want to be healthy. And that's why there was a huge focus on health and wellness and organic and all natural, especially coming, during COVID, coming after COVID. Nobody wants to get sick, and we're key on being that deliverable where we want to be the grocery store you want to turn to. One, because we deliver great value, but two, because you're absolutely right, Jack, is the experience that we provide is like nothing else in the retail market. We are very transparent. We are blunt. It's what customers are searching for these days. There's no corporate speak when it comes to us. We're delivering on our brand promise, which is delivering healthier food for less and delivering value into people's pockets. And that is our key thing when we're coming, and kind of catering to our existing customers and recruiting new customers.
So basically, if you get to 10 stores, that would get you roughly 100 million revenues.
Yeah, and that probably around 12 to 15. We factor for an average, a very conservative estimate of 6 to 7 million a store. So when you look at that, that puts us right in that 12 to 15 store range. And like I said, the potential here just in our local market is between 20 and 30. That doesn't include national or international. So when we talk about where we could potentially be as a company, just in our local market, we could be 150 to 200 million dollar a year company. And so when you look at multiples, in the space for a high growth story, even a 2x times sales, with how we've kept our float very tight, there is just a ton of potential.
I think you can get to a 5x plus multiple because it's such a unique story. It's not quite a commodity grocery store. It's really a brand story. It's like a franchise model. And I think once you start getting momentum, investors looking at, especially once you get to an institutional level, they're going to start modeling out, the future growth. So they're going to be looking at this as, okay, because it's very easy to model. I mean, each store does whatever, let's call it 8 million. You do one location, you do 100 locations. It's like the Home Depot model. So I mean, like, anybody that missed out on buying, Home Depot in 1980 when the thing went public, or Walmart, or any of these McDonald's, any of these chains, it's a similar opportunity. I mean, now, Matt, I'm not saying this is any of those, but it's you're gonna have to execute. You're gonna have to execute, but the potential is there, because it's the same franchise cookie cutter growth model, which is Wall Street loves that model because you can replicate it, and it seems like you have the 3 stores which have scaled in a decent growth. How long would it take you to get to 10 stores?
The potential is there. The potential is there. It's just filling the real estate pipeline. I mean, during COVID, we were very focused on our operations and delivering every day and making sure that our staff and our customers were safe and healthy. And now seeing what's happened, at the tail end of COVID, hopefully, knock on wood, we're on our way through it. And coming post-COVID, we've seen the real estate opportunities really open up. So right now, we're really focused on evaluating our local market and getting that real estate pipeline filled, so that we should have, hopefully an idea in the next little while, kind of what that's going to look like and what our growth trajectory is going to be. But Jack, I think you hit it on the head. Is everybody loves a growth story, and I think stocks always respond well to growth. And so
I'm looking at this is like a Chipotle. I mean, one of the hottest stocks. I mean, if they missed out on Chipotle, this is very, very similar. I mean, Chipotle was sort of that hip type of alternative to McDonald's, or we have Sweet Greens. Sweet Greens is going to go public now, which is going to, I mean, all they do is sell salad, right? I mean, and
you want disruptors,
massive multiples. I mean, you could get a 10x multiple. Why not? I mean, if you get to, you open up 10 stores, 100 million, you'd be at $1 billion valuation. So,
you know what, you never know, and it's difficult for me to predict. I think for myself, my biggest thing is I want to always be focused on growth. And I think from a bricks and mortar side, I've outlined, we got a ton of potential here in our local market to easily hit our goals. And then, to access the plant-based food space and what's going on there to garner additional attention and excitement to our company, with a great company, the future of cheese, with a great management team and a great product that could be exported internationally. And we could do a ton of things with that company to deliver shareholder value. When you combine the both, like I said, growth is the name of the game in the public markets, and you want to be growing your company responsibly. We're in the best position we've ever been cash flow wise, cash in the bank to fund, kind of our initial commitments. And if we really want to pump up, there's a ton of potential to really take some big steps here as a company.
Okay. Yeah. So basically, okay. So let me jump into some audience. Let's hopefully we can answer everything real quick.
Sure.
One question I think was Dino asked: do you grow your own organic fruits and vegetables? In Ontario?
Nope. We are a lean operator, which any potential shareholder should be excited about. We don't get involved in things that are not our core forte, that add expense and complexity. Like Jack touched on, we focused a lot on being able to, how do we grow our concept and multiply it out easily and efficiently and cost effectively? And that is streamlining, and that is simplification. And so we are not interested in adding any complexity that we don't want to, that is not our core business. And being, vertically integrated is not something we're interested in. The supply chain is more than there to help supply us with the products we need. We don't need to become a producer, in terms of at the organic level.
Okay, let's try to run through a couple more questions. Enyo is asking, typical grocery store margins are 2 to 3%. What would your net profit margins be?
Yeah, that's the beauty in the organic space. And if you look at what's been going on, in conventional and accessing things like the organic and the ethnic food spaces, is because they're margin enhancers. So our typical gross, we're hitting close to a 30-point gross. And our goal has always been as a company to hit that 8 to 10% net, which is, like you mentioned, almost 2 times what traditional grocers get. So organics is a profitable side of the grocery sector. I think the one thing that is great for us is we're hitting margins that are on the high end while being the price leader. And I think that goes back to our 4 points of differentiation in terms of how we insulate ourselves is we are very highly rationalized in terms of our SKU base. And our focus is creating unique partnerships with brands that allow us to deliver value on the price end while not, impeding margin. And so I always equate it to, you go to a brand and you say you're one of 100 rice brands in our store. It's not an easy conversation for a brand to want to give back to a retailer. You say you're one of 5 brands or 4 brands or 3 brands, and we want to drive value with your brand. It's a much different conversation in terms of how they want to work with us. And so the relationships we've been able to create with the brands that we do support in our store and delivering our A to Z kind of, shopping opportunity allows us to deliver great margin while delivering industry-leading pricing.
Hey, Matt, a question. When are you going to enter the U.S. market? Because I think your brand would do phenomenally. I mean, this would be a major catalyst.
Yeah. You know what? It's definitely something we're always interested in growth potential. So like I outlined, we have a ton of potential just in our domestic market. And then if we go out one step further in our national market, but internationally, we always have people kicking our tires, whether it be in the US market or European market. And the beauty about our business, going back to, something that you touched on, Jack, is that the model is so scalable. It is a simplified grocery model, but so unique and so disruptive to the grocery space. That it really hits both boxes. So I think for us, we're always looking for interesting partners, and I think when it comes to even the U.S. market or the European market, it'd be great to link up with a great domestic partner that knows the market well, that can scale the business at the ground level and be the boots on the ground while we lend our expertise. And so that gives us a potential to access a new market, very easily, very quickly. Where if we tried to do it ourselves, it might be a little bit more of a slower process. So I think, like I said, we're always evaluating growth prospects, whether it be, locally, nationally, or internationally. In the U.S. market is something that we always keep an eye on, and always, engaging in conversations about that market.
Two last questions. One is a very important question. People are asking, I think it was Tracy. Somebody was asked, Bo asked about financing. Do you have any plans to do any kind of financing, or is there going to be any kind of dilution anytime soon? And I think you can do in your business. I mean, there's a lot of, you don't have to do equity. I mean, you could do. There's a lot of lenders who could. You could get very, very low rates. I mean, your business is it's a lending friendly business.
Yeah, and there's a lot of different ways that we can finance growth. I think 2 things that I'd say about that from a potential new investor standpoint is, number one, our cap table is super tight. We have always maintained a very tight cap table. We have not blown out our cap table or been irresponsible when it comes to the money that we've raised and things like that. So I think that is very good for a potential new investor. The second point is that if there was a unique opportunity to really grow rapidly, then we'd be in a position where we want to raise capital to meet that demand. And like Jack mentioned, there's multiple avenues to partially finance through equipment lending, through debt, through other means that are very cheap capital that would minimize dilution. And I think as a company, we're always sensitive to that. We always want to be respectful of shareholders and minimizing dilution, but we always want to be able to take advantage of opportunities. And I can't stress enough, the opportunity in the market coming out of post-COVID is enormous. And so we are very geared towards growth, and we want to take that advantage while it's right in front of us to potentially rapidly grow the company.
I mean, your cost to open a store is how much?
Yeah, the beauty around a 10,500 square foot store, you're talking about like $1.5 million with inventory and with landlord.
How much of that can you get lenders to fund? Because usually a lot of that is like you have vendor financing. How much of that is?
Oh yeah, like the beauty about it is grocery stores are so equipment heavy. So you can always deal with an equipment leasing company if that's a route that we want to take. And you're talking probably 70% of a new store is hard equipment. The rest is leaseholds, inventory, and advertising. So when you talk about the majority of the cost is through hard equipment that's easily financed, if that's a route we wanted to go, it makes it very easy to potentially access alternative financing solutions as we look to scale the company.
Okay, so you don't need to do. I mean, you don't need to do a lot of equity financing to roll out stores, because you have a lot of this. A lot of vendors who can finance it. So it's very good terms. Very important question. People have asked, what, what is the synergy of the cheese business? What makes it so important for, OG's future?
Yeah, the beauty about it, the future of cheese businesses, and it's a great question to ask. It's just what is going on in the plant-based food space. So for those investors that got in on cannabis, 5 years ago, 7 years ago, you saw the rush to the cannabis space and what happened with some of those companies. That is basically what is happening in the plant-based food space. There is a ton of explosion in the plant-based food space. And for us to get into that with a business that is not foreign to us, I always say to people, it's not like a mining deal or a blockchain deal. It is a food product, and we know food, and we know plant-based especially. We are a huge seller of plant-based products. So it created a unique opportunity to touch 2 points. One, to get into a business that we know that delivers value to our operating company in terms of the relationships that we have. But two, as a publicly traded company, we're responsible to our shareholders to look for value options. How do we deliver more value? And getting into a hot space like the plant-based food space delivers additional shareholder value over and above what we're doing with Organic Garage. And like I said, if you look at some of the recent acquisitions, Danone bought a company out of the US called Earth Island. Saputo bought a company just recently called Boot Island Foods with another company they bought for 180 million. So there is a ton of acquisition and consolidation in the space. For us to get into that with the kind of the management team that we have and the product that they have, it was just too good an opportunity to pass up. And I think as an existing shareholder, you should be pleased about how we're always focused on delivering additional shareholder value. But as a new investor, we're at the ground floor of what's happening in plant-based and what's happening with the future cheese company. And the only way up is up from here. So it's a super exciting time.
Okay, so we closed the poll, our unicorn poll a little bit early. So because technically, okay, so let's see if we have the results here. The results, 56% say yes, and we had about 56% that voted. So we have hang on, how do we go? Okay, there we go. So we have by a small margin, they're saying this could be potentially a unicorn at 10 meg. I think there's a much higher probability because all you need to do is get to, you open 7 more stores in the next 18 months, and there's your 5x. There's your 500 million market cap. That's a 10x from here. So that's kind of the path. But Matt, last question I'm going to ask you.
Sure.
What other news flow can we expect to see from the company next 60 days?
Yeah, I mean, I don't ever want to define it to a time period, but I do want to say that on the OG side, like I mentioned, we're focused on growth, and that is new stores. So there's lots of things that we're working on that we're excited to announce in the future when it comes to new stores and timing of that. And then on the future of cheese side, we're going to be launching the products domestically here in terms of entering the market. And then our next focus is on a national launch and then international opportunities. So on both sides of the business, there's a robust news flow to keep investors interested on what we're doing and kind of what we're focused on, which is growing the company.
So future of cheese is gonna be basically one of the big news drivers in the next 30 to 60 days.
Yeah, we're excited. We're gearing up to launch the products into the market, in the next 60 to 90 days at the most. And I think that is the basic start. So it's super exciting time for any new potential investor, looking at us, because I think once those products enter the market, it's only up from here. So it's very exciting.
Matt, last question. I think I said that a few times, last question, but this is the last question. In your opinion, top 3 reasons why investors should consider Organic Garage stock today?
Yeah, I think, number one, just the growth potential in the bricks and mortar side. Like I touched on, COVID proved that groceries are essential services. We're not going anywhere. We're not susceptible to kind of what's happening online. People need to go to grocery stores. We saw that firsthand. And the market and the opportunity in the organic space is much different than conventional. Organics is the fastest growing segment in the retail grocery space, and we are at the cutting edge of kind of where we're going as a company. So that's number one. Number two, on the plant-based food side, the future of cheese, people should be super excited. There is so much attention going on in plant-based foods right now. I'm sure some of your investors have seen that with people like Beyond Meats, with companies like Very and other companies that have entered the public markets, a ton of attention that's going on, and we have a great product and a great management team. The two combined being number 3 is just growth, and that is the name of the game in the public markets, is how are you growing your company, and the runway for growth for us is endless. And so we're really geared towards capitalizing on that in the next 12, 15, 18 months to rapidly transform the company to where we are, to where we want to be. And it should be a very exciting time for investors looking at us.
Okay, Matt, thank you very much. And I'm sure our
Thanks,
audience
Jack.
is going to follow your stock in the coming weeks.
Yeah, no, I appreciate it. Thanks for having me.
Thank you again.